Good afternoon, everyone. On behalf of CMS Infosystems Limited, we thank you for taking the time to join us today for this landmark event in the journey of the company. We welcome you to the virtual press meet on the announcement of the company's forthcoming IPO. Before we begin, I'll take a moment to introduce the spokespersons from the company. We have Mr. Rajiv Kaul, Executive Vice Chairman, Whole-Time Director, and Chief Executive Officer, and Mr. Pankaj Khandelwal, President and Chief Financial Officer. We also have senior investment bankers on the panel today who represent the lead managers to the IPO. We have Mr. Suraj Krishnaswamy, Executive Director, Investment Banking at Axis Capital Limited, Mr. Hiren Rai Pancholia, Director, Capital Markets Group at JM Financial Limited, Mr. Vishal Desai, Senior Vice President, Equity Capital Markets at DAM Capital Advisors Limited, and Mr. Aman Puri, Head of Equity Capital Markets at Jefferies India Private Limited. I'll now do a quick walkthrough of the conference guidelines. All microphones have been placed on mute. We'll have a presentation by the company spokesperson, followed by a Q&A session. The questions can be typed in the Q&A panel available to you, and they will be read out to the management in the Q&A session. To members of the press, a gentle reminder to identify your name and media house while posting questions. Before we kick off, we have a short corporate video to take you through the journey of the company. May we have the video, please?
In the next few years, India's economic growth rate is predicted to be one of the highest among the G20 countries. Result? An increase in disposable income and consumption, a rise in organized retail and e-commerce, an increase in the number of transactions and volume of cash movement in the economy. We are CMS. We play an important role in connecting commerce and facilitate the flow of money across the economy. Our integrated B2B outsourcing platform caters to banks, financial institutions, organized retail, and e-commerce companies in India. As of March 31st, 2021, Frost & Sullivan ranks us as India's largest cash management company based on number of ATM points and number of retail pickup points, and as one of the largest ATM cash management companies worldwide based on number of ATM points. Our services extend across multiple stages of the cash cycle in India. Cash and transit services, ATM cash management, ATM managed services, retail cash management, currency processing, currency chest automation. We believe we aren't just in the money-moving business. We are in the connecting commerce business. And we do this in many ways. Our end-to-end ATM cash management services to banks cover the length and breadth of the country. We provide retail cash management services to e-commerce logistic providers, large format organized retailers, railways and transportation network operators, hospitals and insurance companies, hospitality chains, government and utilities, NBFC and financial institutions. Our cash and transit services enables banks to efficiently and effectively distribute cash to their branches. Our currency chest automation for banks and NBFCs covers cash in transit, cash processing, reconciliation, and reporting of movements. We also provide bullion logistic services for delivery and pickup of bullion between businesses. We rank as one of the top 3 in banking automation product sales in FY21. We provide an integrated platform for brown label ATM and managed services, and are one of the few players with capabilities in deployment and maintenance across various product types. Our multi-vendor software solution enables banks to centralize their ATM channel management, resulting in improved customer experience and security. Through our AI and IoT-based remote monitoring services, we enable banks to monitor and control ATMs across India. Our end-to-end card issuance, management and personalization capabilities support Government of India's initiatives to improve financial inclusion. We have a pan-India presence with a fleet of 3,900 plus cash vans and a network of 238 branches and offices as of August 2021. Our footprint extends across difficult to reach and remote rural and semi-urban areas, and even a few locations which are only accessible by boat. Our integrated business platform is supported by customized technology and process controls, such as technology-intensive location intelligence maps and route optimizers, mobile applications to enable field mobility.
India's banks have trusted us for over a decade. We are a market leader in India's cash cycle across both the technology solutions as well as logistics services. With a successful track record of incubating and growing new businesses, we are quite excited about the future potential of fast-growing areas such as AI-based remote monitoring, payment solutions, and financial services distribution. We aspire to being an integral part of the future of money and commerce in India.
We are CMS and we connect commerce.
Thank you. I'm sure that video has thrown some light on the operating model and business highlights of CMS Infosystems Limited. I now invite Mr. Suraj Krishnaswamy from Axis Capital to initiate the proceedings. Over to you, sir.
Thank you. Hi, good afternoon, ladies and gentlemen. I am Suraj Krishnaswamy from Axis Capital. On behalf of Axis Capital Limited, I welcome you all to the virtual press conference of CMS Infosystems Limited's IPO. I hope you're all doing well and keeping safe. We at Axis Capital feel extremely privileged and honored to be associated with one of India's leading B2B outsourcing services company with an integrated business model and having market leadership in its varied but adjacent business lines, the cash management, the ATM managed services, and tech solutions. Backed by Barings Private Equity Asia and a long-standing management team led by Rajiv, CMS today is India's largest cash management company based on number of ATM points, more than 66,000 of them, and number of retail pickup points, which is more than 43,000. It's one of the largest ATM cash management companies in the world based on number of ATM points. Company has a great track record of growth and profitability with a PAT CAGR of 32% year on year for the last 3 years, and the company is a zero debt company. With ATM and branch network expected to grow more than 1.5x in the next 5 to 6 years, and the remote monitoring is expected to grow at CAGR of more than 25%, we think this company has a long platform for profitable growth, and we are very excited to bring this company to the capital markets. Before we start, I would like to introduce the team that we have in here today. Mr. Rajiv Kaul, who is the Executive Vice Chairman, whole-time Director and CEO. He has been with the firm for more than a decade now. Mr. Pankaj Khandelwal, who is the President and CFO. Within just 13 years of its existence, I think CMS has developed an extremely integrated business platform, which is supported by customized technology and process controls, which enables them to offer the customers a wide range of tailored cash management and managed services solutions while generating cross-selling opportunities. That's what really excites us. They cater to a broad set of outsourcing requirements for banks, financial institutions, organized retail, e-commerce. These are some of the fastest growing sectors in India today, and we're very excited about it. Before I hand over this to Rajiv and Pankaj, I'll just quickly take you through the specs of the IPO. The total IPO size is about 1,100 crores, which is 100% offer for sale by Barings Private Equity Asia, who are also designated promoters of the company. Price band is 205 rupees to 216 per equity share. Issue opens to public on Tuesday, 21st December, and closes on Thursday, 23rd December, with an anchor scheduled on Monday, 20th December 2021. We have received some great interest from marquee institutional investors, both domestic and FIIs. In spite of the new variant of COVID we are seeing and the volatile capital markets, the kind of demand we have had from investors bears testimony to the resilient business model of the company. Without taking much of your time, I would now request the management team to take you through what has been a momentous journey for them and their future growth strategies. Thank you.
Thank you, Suraj, for a very good introduction. Good morning, all of you. Thank you for your time and attending this conference. It's a privilege for us and my team to be here to present to you about our company story. I have 3 sections really. I want to talk to you about who we are, what do we do and how do we do it, and where do we see the company going forward. I want to take the next 30-35 minutes presenting this to you. First, I mean, every company institution is built by its quality of its team, and the quality of team, shareholders, board is all together. I want to quickly introduce our team here. I have a background, I'm Rajiv. I have a background in the company for more than 12 years. Prior to CMS, I worked in Microsoft in India, building the business here, moved to Seattle, ran emerging markets, and then shifted to Actis Capital as a private equity player handling technology, media, telecom. Came to India and I led with the buyout of CMS with Blackstone as our partners, which then Blackstone and the founding family sold their shareholding to Barings Asia, another leading private equity firm. So we've had institutional ownership of the company for the last 12 years. Pankaj, our CFO, has been in the company for the last 15 years. Anush, who runs our largest cash management business, has been in the company for again 12 years. Manjunath, who's the president for our fast-growing, emerging managed services business, has again been with the company for over 10 years. Sanjay, as our head of HR, and Rohit, our CTO, have both joined in the last 1 year. If I look at our extended team, you can see that the majority of the team has been together for over a decade. And that brings to you a lot of stability. You get a management team which has worked together through ups and downs of industry cycles, both at an economic level or even at an industry level. And that learning and that value of the team working together, I think, brings a significant advantage to our shareholders. At a board level, we've been quite blessed with very strong, highly governed board from day one. Our current board includes people of stature of Ms. Shamala Gopinath, who is a former deputy governor of RBI and also a former chairperson of leading institutions like HDFC Bank. We have Chris Jamrose, who was a non-independent, non-executive director, earlier served on the board also for 4 years, who built Garda Cash into one of America's largest cash management firms, and now serves as an executive chairman at Roadrunner and Ascent Global Logistics, both very large logistics companies in the US. We have Mr. Tapan Ray, who was on our board, and he is a former Secretary, Ministry of Corporate Affairs. Also, is currently the CEO of the Gift City in Gujarat. And then we have Jimmy Mehtani and Ashish Agarwal, senior representatives and partners at Bearing Capital Asia. So I think we've always been audited for the last 12-year journey with the Big Four. So you get a team, you get a very qualified team, you get a very strong board governance and a very strong governance systems in the company. Let's shift to the next slide. So what is the platform all about? The platform is we are India's unique integrated cash management and managed services company. We have built our business initially from a cash management footprint, which is primarily a very strong, deeply penetrated logistics network. We cover more than 15,000 pin codes in the country. We cover 97.5% of India's districts. We are present in every state. We have 238 branches. On this network, we manage almost 66,000 ATMs and 43,000 retail cash points, making us amongst one of the largest companies worldwide into the volume of activities we handle. Our market share is robust. We are the market leader in the sector in each of our sub-verticals in cash management. For example, in ATM itself, our market share is 41% of the outsourced market out here. But more importantly, from your perspective, the logistics network delivers almost 1 million to 1.5 million activities per month, 50 to 75,000 activities per day. And that's the robustness of the logistics platform from both a tech enablement, the route mapping, and also from a risk management perspective, which we provide to the bank so that they can serve their end customer, which could be an Indian consumer or an Indian retail outlet, in a very efficient, cost-effective manner. We took this business and the strength of our cash management, and over the last 5 years, we expanded into a broader ATM managed services vertical, where again, there is a lot of technology behind cash. When cash needs to be provided to you anytime, any place, at hopefully the cheapest cost, a lot of technology goes back into it. And that's the adjacent areas where we expanded our business. We have been fairly successful in this expansion. We have now got in our products we have installed, we've got almost 26,000 products installed on the banks for automation. But more importantly, this is a fast growing business where in the last 12 to 15 months, we have won an order book almost close to 1,550 crores. Last year in the 2021, we took this expansion strategy even further, where we entered a tech solutions area, which is around software and remote monitoring. In remote monitoring of things like ATM sites or bank branches, we are a fast emerging leader with one of the best technology platforms available, both from an IoT-based and cloud software-based SaaS platform, which is being adopted by leading banks as we speak. As on today, we've got an order book already of 15,000 sites, which we are working on to install. And that order book is almost close to 400 crores, which we are working to execute. Again, keep in mind, this is a business we entered in 2021, and you can see how quickly we've been able to succeed and grow into this business. So if companies are as good as numbers, and I think I wanted to give you a quick sense of our size and scale. If you look at our revenue in the year preceding COVID, our revenue grew 21% to 1,383 crores. In COVID year, our revenue declined 6%, which I think is quite a feat when you think about the fact that when we serve our banks as a clients, they are in turn serving the Indian citizen. And in a year of COVID, where consumption got disrupted, mobility got disrupted, economic growth went down, we were able to arrest the decline of our revenue to just 6%, which is a strong testament to the diversity and the diversification of our businesses, as well as the strength of a business model. More importantly, it indicates to you how resilient the team can be and the company can be if any adversity like that occurs. When you think of the last 5 months, which are the first 5 months of this financial year, we look at our revenue at 626 crores. The 626 crore revenue is in a period where we had the COVID wave 2. But if you were to extrapolate this revenue over 12 months, that would still be a 15% growth over FY21. So very robust growth metrics in adversity helps you build a very high quality company, which is what we're talking about here. Similarly, when you take this, extend this on an adjusted EBITDA basis, which has grown at 19% CAGR, you look at our EBITDA margins, which have grown from 18.7% to 23.4% in end of FY21. In the last 5 months, they've expanded further by 70 bips to 24.1%. And finally, on the PAT side, we've had a very robust PAT growth, 32% CAGR from FY19 to FY21. Again, when you look at our PAT trend line for 5 months of FY22 and extrapolated for 12 months, that would result in a calculation which would be close to 20% PAT growth if the same trend continues for the remaining 7 months. So very robust metrics, zero debt company for the last 3 years. We've had 307 crores of cash in the books at the end of FY21. And our average cash flow from operations as a percentage of adjusted EBITDA also at 63% is very, very, very high quality. So I want to step back now with that quick introduction and sort of, sorry, let me take you to the next slide. Yeah, I want to step back and tell you what is the cash cycle in India and what exactly is the opportunity out here. Currency is printed by RBI. That is given to a bank. A bank will hold the currency in a currency chest. Then at that point, the cost of cash is still with the RBI. The banks don't incur any costs. As soon as the currency leaves the currency chest, it goes to two places. It goes to a bank branch or goes to a bank ATM. That's when the banks have to incur a cost of the currency. So a lot of movement is around just in time, getting the currency out of the door just in time to when it is required. So managing that efficiency needs a lot of technology, needs a lot of planning, needs a lot of, and that's something which CMS does for the banks. Once the currency is at an ATM, the ATM site has become a fairly intensive value chain. That value chain starts from just deploying and choosing the right location for a site, maintaining it well, making sure the uptime is very high so that consumers get access to cash anytime. Then the whole managed services and managing the ATM network, deploying it or deploying the capital on behalf of a bank to do it, and finally running the software to control the ATM and the ATM site being monitored actively from a remote monitoring perspective. This has become close to a 7,000-8,000 crore value chain in the market. And that, therefore, I said there's a lot of technology behind what you get finally as cash in your hands. Cash is withdrawn by a consumer, spent somewhere in the economy. If it is a retail store which is organized, or if it is a point where we are servicing, we'll help bring that currency, process it, account for it, reconcile it, and bring it back into the banking channel, into a bank branch or into a bank chest. That currency chest operations also slowly are getting outsourced because the technology which you need to check for quality, counterfeiting, processing, shrink wrapping is again changing, and there is a lot of automation out there, and banks are choosing to outsource their entire operations to third-party players. So that's the whole cash cycle in India. CMS is again a very unique company which has now built service lines across all of these elements of the cash cycle. In almost all of these verticals, CMS is the market leader and the #1 company. And we think there is a massive opportunity as banks will outsource more and more, that CMS will get a benefit of that growth. To summarize, therefore, what is our growth playbook? Our growth playbook is fairly straightforward. There is a growing cash cycle. Currency in circulation in India is at 30 lakh crores. 30 lakh crores on GDP is almost a 14.5%. There's an all-time high. Within the cash cycle, there's a lot of outsourcing going on from what the banks did in-house to what is now being given to outside high-quality players so the banks can trust and depend upon. As their cash cycle volume and activity in outsourcing increases, the complexity increases. And that complexity can be handled better by integrated higher quality players. As we grow with that, and that's our tailwind, we are using our basics, our first principles to just scale, offer integrated offerings, and make sure that unit cost economics on every line of service, by achieving high scale, we can offer a compelling value proposition to clients in terms of the lowest cost or highest quality or the best network density, but yet maintain our profitability levels and continue to grow. As we grow, we keep looking and evaluating adjacent areas where either our customers are looking for new companies to come and help them with, or new solution areas where they need help on technology-wise. And therefore, we keep examining these opportunities to expand at the right time with the right approach. And that approach could be organic, where we build it in-house, or it could be inorganic, where we go and acquire a company with an offering already so that we can scale and improve the offering to their customer. So fairly straightforward playbook. We keep a very long-term focus on how we do this and how we grow. So now move into growth. How do we think about the growth opportunity for ourselves? I think I'll simplify this to 3 broad bullets. I'll start with the last one, point number 3. We are, end of the day, I keep telling our team, we are end of the day linked to the growth of the Indian economy. And as we get bullish about the coming decade for India, and the opportunity for not just banks, but Indian consumers to grow their income, to grow the per capita GDP, to grow their consumption will increase, their expenditure will increase. And as that happens, India will formalize more and more with various initiatives from the government. And as India formalizes, we will see a massive tailwind of opportunity, because when that formalization happens, a company like CMS will get an opportunity across all of these areas. That could be in ATM, that could be in retail, and whatnot. The second part of it is just the whole regulatory focus. A regulator, RBI, is focused on the Indian consumer getting high quality service. Getting high quality service from higher availability, higher uptime, and higher compliances. And they are fueling that, and we'll talk about what the RBI is doing to the benefit of the Indian consumer and how that could be an opportunity for us. The third is the fact that large public sector banks who have today got a big refresh cycle of their infrastructure as they have beefed up their balance sheets for future growth. And as that happens, there is a big tailwind for us from both an end-to-end outsourcing perspective, but also from our ability to offer them very good value. And therefore, we are seizing that by winning large contracts, which earlier we weren't even bidding for. So when we come to the order book, I've given a sense of the order book already. We have almost close to 1,000 or 2,000 crore order book in the last 15 months. This is across public sector banks who have issued a variety of large RFPs. There are RFPs for almost 20,000 ATMs which are coming. This is just one example of a value chain. And then we have broken this order book down by customers and the line of business. All of this is part of a managed services business. If you look back at the slides I presented on our revenues, we had indicated that a managed services business in FY21 was about a 365 crore business. On that business, we have won an order book of 2,000 crores. This order book is usually on a 5 to 7 year period. So you need to take an average of 6.5. You can sort of calculate how strongly that managed services business can grow basis this order book, which has already been won out there. And this will also help us launch new services and scale them at a very rapid pace. I'm going to give you a quick case study where we look at one of the India's largest bank, SBI, which services the length and breadth of the country, which also is a reminder for me to tell you that 62% of CMS's network is in semi-urban and rural. We built distribution way back in 2010 into the depth of the country. And therefore, we are one of the best players which has the reach and the network, our fleet, our engineering strength on the ground to be able to assist large banks which have their consumers in the depth and breadth of the country, and therefore helping financial inclusion. You look at the SBI, we have won 7 large contracts actually over the past 7 years at fairly good frequency. And the gamut of these wins cuts across from product automation in 2014-15 to remote monitoring in 2021. And I'll just pick one in the center to talk about right now, which is a multi-vendor software. Banks run ATMs on some operating system, usually is Windows, but on top of that, they need a layer, which is a multi-vendor software, to be able to better manage and control their ATM network from both a cost and a compliance perspective. SBI ran a fairly intensive RFP at a global level to pick and choose a company which could technically do the work. And very few companies got shortlisted. CMS is one of them. And we are lucky to have won the final contract. A multi-year contract where we are managing 46,000 ATMs currently for SBI, and SBI has a right to extend this up to 100,000 ATMs as they grow and expand. So you're talking about a company which has gone from, if you look at the top ribbon, we have gone from cash management service to automation to managed services to software and to remote monitoring. So we have extended across the value chain. We are fairly unique in that you don't find such companies usually around the world, which are able to take a strength in one particular sector and then extend and build upon that using technology into the entire ecosystem. Our opportunity is, as other banks try to incorporate similar norms of outsourcing strategy into their business plans, we should get the benefit of those banks and their contracts, which are potentially up for bids now and in the coming couple of years. The second point I want to talk about is about the regulatory focus. The RBI recently increased the ATM interchange from 15 to 17 rupees. It's sort of a 13% increase. Now, this indicates to people like us that the RBI is focused on a couple of things. One, the strength and the quality of the ATM channel. A lot of costs have gone up in the past years, and RBI, I assume, is also helping deployers, which are both banks and white label companies, white label ATM deployers, to make sure that they are incentivized to deploy ATMs in semi-urban rural areas so that the length and breadth of the country can get access to the financial ecosystem. Secondly, we've seen post-demonetization, the RBI has been focused on improving the operating standards and bringing the operating standards of both the banks and the currency management, cash management companies to global levels. And they have issued a variety of directives to the entire industry to start incorporating and following. What that does is that it just makes sure that the compliance norms, the quality of infrastructure all of us deploy and work with, and the outsourcing norms and how the processes are run are at a fairly high threshold. And while this is very technical and we can get into it if somebody wants to, but what this really helps is it enables and helps good quality, highly governed, highly compliant companies compete better in a marketplace where you're raising the bar for every company to make sure there is every following a particular minimum standard. That needs investments, and as a market share leader company, we have been leading from the front in making those investments so that it can benefit the currency ecosystem, benefit the Indian consumer, and our own industry. That results then in a pricing increase, which is fairly significant given where we are today. The pricing, let's say for an ATM, is poised to grow by almost 2,800 to 3,000 rupees on the current base, which effectively if you start calculating, this will lead to a 40 to 50% pricing increase so that you are able to absorb the cost of the compliance which you will incur on behalf of the banks. The third area which I want to talk about growth is about the whole formalization of the Indian economy. So if you pay attention to the top left-hand graph, the Indian retail opportunity in my mind is a decadal opportunity. It's almost a 2-decadal opportunity, in fact, where there are almost close to 3 to 4 million retail addressable points, which are not largely organized. We think they will get organized over a period of time. And even if we think the organized retail points are 450,000 points today, less than 24% of them are engaging in a cash management service. This, as per Frost, so all my data points are referenced from a study by Frost and Sullivan, or I'm referencing data from NPCI or RBI data sources. So that's the disclaimer before I talk of any numbers. But the FNS study indicates that the 450,000 organized opportunity could be an 800,000, growing at about 12 to 30% CAGR per year, because the outsourcing ratio should increase there. So I think that's a significant opportunity when you think of the volume growth opportunity in retail as India formalizes. Now, it could be faster, but depends on how rapidly India formalizes. This could be e-commerce, which is a large revenue segment for us. This could be just organized retail. It could take many forms. But we think that this is a good high growth opportunity from a multi-year perspective, and that becomes a good strong tailwind for us. I'm going to switch slides 1 second to tell you about the ATM business. The ATM market on the left-hand side, if you look at it, India is the world's 3rd largest ATM market. It's right after China and the US. India has more ATMs than all of Western Europe or Eastern Europe or South Asia combined. That's sort of understandable given the cash intensity. It's also understandable looking at a population. But instead of looking at just population density, which is a center graph, I would rather take your attention to the right-hand side of the graph, which is about the penetration between various parts of India. And I'm not talking about metro versus rural. That's an easy justification. I will point you to look at how a penetration of ATMs in a large state like Tamil Nadu, there are 35 ATMs for 1 lakh people. In Andhra Pradesh, it is 21 ATMs. But then you look at large, big states like Rajasthan and Madhya Pradesh and Uttar Pradesh and Bihar, the penetration levels are between 7 to 14, average of about 10 or 11. As these states do better, as they grow their GDP well, as the per capita GDP improves, you will see more and more higher penetration in these states, and they should hopefully come to the national average of where we are at currently 22. So I think there's a significant opportunity for ATM penetration, because they are one of the easiest forms of access to the banking access for people in many locations of the country. So I'll use this as a backdrop to move to the preceding slide. And now if you look at the bottom left graph, the bottom left graph talks about that India has 255,000 ATMs, out of which 1.5 lakh ATMs approximately are outsourced to cash management, out of which CMS does 66,000 ATMs. So on one way, you can say our market share on 153 is roughly 43, 44, whatever percentage it comes to. But then I look at the broader opportunity saying there are 2.5 lakh ATMs. Our market share is roughly 25, 26%. Because 100,000 ATMs are still being handled for cash management internally with the banks, cooperative banks, public sector banks, and whatnot. That outsourcing ratio has been steadily increasing and will continue to increase as banks will outsource more and more. But overall, the F&S study also indicates that the ATM market in India is poised for a growth of about 6% from where it is right now for the next 6 years. So the base of ATMs will expand to 365,000. The outsourcing ratio will increase from 60 to let's say 75%, which means that the addressable market for us is almost 275,000 ATMs. And if we are able to take our market share from the current 43, 44 to a higher level, it tells you what our base of business can grow there. On top of which, there is a fairly significant pricing increase, which is required to mandate, to comply with the regulation and to improve infrastructure, which leads you to a very strong double-digit growth opportunity in the ATM business. And the same in retail. You have a 13% volume growth opportunity and a very significant pricing growth opportunity. The question I get asked many times is that where does the health of the ATM channel go and how much more can the ATM channel grow? And I use this graph on the right-hand side to give a data point, which is when you look at the velocity, it's how much currency is withdrawn from an ATM channel as a percentage of a currency in circulation. The velocity of cash at ATM channel in India is very low. It's 1.5x. And compared to China, it's 8. Compared to Brazil, which is another large emerging market, which is 5.5. So we give some roughly data points. But the broader question comes around, and I know this question will come later, so I'll preempt it, around digital versus cash. And I want to set some context for that. The context is that there are 900 million plus Jan Dhan accounts and other accounts in the country. The number of saving accounts in the country is growing at about 1.5–3% every year. On 900 million base, that's a large number of additions which are happening. Each of these accounts has a debit card. A debit card can be used at an ATM to withdraw cash, or it can be used at a point of sale machine to do a digital transaction. So a debit card itself is a comparison point of cash versus non-cash. Out of these 900 million debit cards, only 250 million debit cards are used actively, which is about once a month. That's what we call active usage. And that growth is trending to an 8 to 10% growth level. When I compare this to UPI, which is another form of digital transactions, UPI has a 250 million sort of base, 150 million is active usage, and that's growing at 18 to 20%. And which goes back to my point saying there is a massive, large cash economy. Most part of it is informal, not parallel. Don't confuse me. It's informal because people withdraw currency, keep using it within their small ecosystem. It doesn't usually come back to the branch because that's a very cumbersome process. And that becomes the informal economy. As India formalizes more, you'll see lots more, as you will have many more retail chains and e-commerce. Even today, cash and delivery in e-commerce is a significant part of the revenue, which companies like us help manage for the e-commerce players. In fact, in our retail business, e-commerce is a very large growing vertical. So as India formalizes more and more over the next 15, 20 years, a large part of these chains will use both digital and cash. And as they use cash compared to before, we will be required to help them manage that for that. And the base of 900 million debit cards, as they start using more of the debit cards, 650 million people aren't using their debit card actively. They will use it more actively over the next decade, whether an ATM or a point of sale machine. And again, that becomes a large opportunity for us when we think from a decadal perspective. So if I had to group this all together, if I had to add this all together, it really boils down to the fact that the market opportunity estimate, if I look at a cash management business, it's a 2,800 crore business end of FY21. Is poised to grow to 8,000 crores by FY27 on the base of the volume growth I talked to you about, and also the pricing growth, which is in action right now. So that's almost a 3x growth. A 3x growth in 6 years is roughly a 20% annualized growth opportunity. I shift to the right-hand side, which is the managed services sector, which is roughly a 6,800, 7,000 crore sector in FY21. Again, bases the whole public sector bank refresh, the shifting of the capital and the capex to an opex model in many lines of businesses, and also new fast-growing verticals like remote monitoring, where banks are trying to replace physical on guards at ATM sites and other places to more remote monitored software controlled security systems and monitoring systems. We see massive growth opportunity that market grows 2.5 times to about 17,000 crores, which is about a 17% growth rate in that sector. You club the two, we are talking about currently our target addressable market in which CMS plays in is roughly 8,500 crore market, growing to 21,000 crore market, which is about 2.6, 2.7 times growth, which is a 17, 18% growth opportunity. We hope to grow our market share and our revenue market share in this business, right? In this business of 500 crores, last year we were at a 1,300 crore revenue. This year, I just extrapolated the numbers of 5 months, that'll come to about 1,500 crores. So the 1,500 crores on that 8,500 crores, whatever the market share is, if we can maintain it or grow it, you can imagine and calculate what business potential for us exists to grow out there. And as banks outsource more end-to-end, they will need higher quality, bigger companies which can handle those projects both from an execution, risk management, and a quality perspective. And I think that's the sweet spot where we are one of the few unique players who can do this end-to-end at a very high quality. New growth, where do we go from here? Even though we're fairly excited about this very strong double-digit growth potential in the sectors we have entered already, we continue to examine and look at sectors. I did talk about the remote monitoring sector, which is we entered last year. Now, just to give a size perspective, right, there are almost 400,000 locations in just BFSI at bank branches and ATMs, which can adopt this technology. And that we think will grow as branches grow and ATMs grow. We think that'll grow to almost 600,000 in the next 6 years. So that itself becomes a 800 crore market currently, which can potentially grow at 25% CAGR to 3,000 crores. What do we do here? What are we doing here is basically we are offering a centralized monitoring center. We are deploying the infrastructure at the site, whether it's IoT-based sensors, cameras, and software, along with video analytics, which we are monitoring the site, the health of the site, the energy management, the entire controls are done remotely. We got to the sector last year. We have an order book of 15,000 sites, and based on just 2 large contract wins, which is initial, and we hope to win more. And then we are using and building and investing in our own proprietary technology and software so that we can do a lot more of this work with self-learning, machine learning technology, and artificial intelligence. And this becomes a pure play technology business for us, which is in our current customer segments. There's nothing stopping us in the future from entering broader sectors, right? We could take this to manufacturing, you could take this to logistics, we can take it to warehouses, we could take it to retail chains and whatnot. And we will attempt to, but right now the opportunity in BFSI is very solid. We see many banks wanting to adopt this, and we hope to focus on winning more contracts and have the throughput we've had in the last 6 to 9 months. Beyond this, we still think there are pockets of interest. Now, again, I go back to the CMS strategy and how do we think as a management team? We look for opportunities which can have significant scale. Right? We look at opportunities and sectors where we can be a clear number one. We look at opportunities where we are able to get the unit cost economics. And the unit cost economics is the link to your scale. How much technology can you use to manage and control cost, control quality, do whatever. And then can you be a number one? If you can't be a number one in a sector in a short period of time, we will usually not enter the sector. So I think most of our forays and expansion has been with that goal. And I think that the quality of that discipline shows in the quality of our financials, quality of our balance sheet. And we want to maintain that even going forward. The areas we have examined, some we have piloted, but we are still not, I can't say we have a full-fledged business model running like the remote monitoring business. I thought we'll share that as, we have examining things like from a collections and on-demand pickups. Can you do an Uberization of cash? Can you have on-demand pickup of cash service running across the length and breadth of the country? It's like almost like a consumer app. Can we do merchant payments, and can you do better services at the merchant or a Kirana store, which will bring a lot of value to the touch point? Can we handle bill payments as a mode of as at any of these points? And can you offer corporate BC services to banks better than what is being offered today? And finally, there is a lot of interest right now in the micro ATM story, because a lot of at the grassroots level, at a smaller town level, people are adopting micro ATMs to see if that can become a viable business model. Again, we go back to saying, what is the problem we want to solve? Whose problem is it? And can we solve the problem at scale? If we can solve the problem at scale to be a clear number one, we are fairly confident that we will build this into new potential successful revenue streams and opportunities of growth for the company. I think with that, we will end our presentation there. Happy to dive into Q&A, and I hope you found that informative.
Thank you, sir. That certainly was an insightful presentation. We'll now open the floor for the Q&A session. We've already received some questions, so while we take those up first, I'd like to remind everyone to post their respective queries in the Q&A panel. And we'll try our best to ensure that all queries are addressed. The first question is from Mr. Dilip Darda of Chittorgarh.com. Could you please tell us what is contributing to other income?
Hi, Dilip. Good to hear from you. Pankaj, would you be able to help Dilip answer this question?
Yeah, so other income is very small for CMS. That it mainly contribute about SLA deduction, what we do from our vendor for not performing well. The investment income, what we have from the mutual fund, and the miscellaneous income and the scrap sales, etc., is part of the other income. It is around 2 crore rupees for the 5 months ended 31st August 21.
Thank you, sir. Next question from Mr. Darda again. Could you please tell us who are your peers and how are you placed versus them?
Sure. I think we have a fairly vibrant ecosystem. Our peers in the cash management sector include companies like Writers Safeguard, SIS Prosegur, Radiant Cash Logistics, and AGS Secure Value. In our managed services sector, if you look at product automation, our peers would be a global major like NCR or a Hitachi. In the pure managed services and brown label sector, it would be leading companies like Hitachi Payment Systems, FSS. And then if you look at software, it would be CMS and NCR. And when you think about the remote monitoring sector, there are companies which have been incubated recently, like Provigil and Securance. But what I want to mention here and underline this again is in the cash management sector, across all the three verticals of ATM, retail, and cash in transit, we are the clear number one, all the three sectors. And we are number three in the product automation business. We are the largest in the software, multi-vendor software business, and we are a key new player in the remote monitoring sector.
Thank you, sir. Next question. Could you please share the contribution from top 5 customers in CMS's growth? This is from Mr. Darda.
Sure.
I will take that.
Okay.
So we have measured in that RHP, that is 57% of our revenue comes from the top 5 customers, and top 3 customers contribute around 45% of the revenue.
Thank you. Next question. What will be the promoters holding post IPO?
Promoters are, this offer is for sale is for 1100 crore, and at 216 rupees price band, it should be, they are holding around 65%.
Thank you, sir. One final question from Mr. Darda. Could you please elaborate on bonus in your order book?
So when a public sector bank issues an RFP, especially public sector bank, and in our books, they have a very clear path of X amount of work which they are contracting for, and they retain the right to give you a bonus order in a percentage basis. Usually we've seen 20% of the order book, which means that visibility as the project starts, they may have the right to give you more work basis their needs. So I think they give themselves that flexibility to give you more work basis their own needs at that time. So that's what the order book refers to in all the contracts we mentioned there.
Thank you, sir. The next question is from Arman Nahar of Z Business. Growing digitization and UPI transactions, how do you see those affecting your business? As the pace at which ATMs are opened may see a slowdown or in the long term may start reducing. Could you please share your views on this?
Sure. I think, thanks for the question. I think we have seen, industries go through their own cycles, right? Each sector goes through their own cycles. I talked about the fact that I gave the reference of more than ATMs, I gave the reference of debit cards and said there are so many debit cards issued which are still not actively used. Either the amount of money they have in the bank is small or they don't know how to use a debit card. And over time, I think as India progresses, you'll see that growth happening. I look at trend lines. The trend line of a debit card usage is 8 to 10%. The trend line of UPI is 18 to 20%. Those trends could change, but we have seen demonetization and we've seen COVID. And I think that's a fairly good experience to look and say that's the trend line, maybe if that goes in the future. So I think on a larger base, an 8 to 10% growth of the debit card users is very healthy. In terms of ATMs, I think, when we entered the cash management sector, the retail business initially was the larger business. But as we saw ATM growth, that became the larger business. So I think these trend lines will change over time, whether retail in many developed economies is the larger business for a cash management company. In India, it's not right now because the ATM sector has gone through a fairly high degree of evolution, growth and evolution both. So, but if you think from a 10 to 20 year perspective, I would be surprised if the retail sector wasn't as big and vibrant as the ATM business we have, right? So I think we are fundamentally linking our business to what the banks need to do to grow. And as banks will grow, they will need different partners they need different services. They will automate more currency chess. They will need different types of logistics services. And we think all of those will grow. Specifically to ATM growth, I think India penetration levels is still very low. And I think that penetration has to logically grow much higher before we can worry about it. And again, think of it, when bank sets up an ATM or a branch, there's a logic to doing it. And that becomes a core part of their infrastructure. They may relocate some ATMs because the viability may change, but they don't shut down and go somewhere else, right? They may go and expand somewhere else. So I think the ATM is a very vibrant ecosystem for large quality banks, and I think they will continue to grow at a fairly good pace.
Thank you, sir. The next question is from Kirti from the Hindu Business Line Research. Could you please throw some light on the split up of recurring and non-recurring revenue within each of the three segments? And also, what is the breakup of EBITDA or PAT margins on a segment level?
So I will have Pankaj to come in to help, but just quickly to explain, our business model and our business lines work on different principles. We have recurring, which is, which for us may mean different things. Recurring for us means a contract signed on a multi-year basis, right? 3, 5, 7, 8 years. You clearly know what type of revenue it is, you plan for it, you build efficiencies over the period of time. Then we have annuity revenues, which is mostly signed from a 1 to 2 year perspective with flexibility to ramp up or ramp down. Now, our cash management business, mostly, not all, is an annuity type of revenue. A large part of our managed services business is recurring type of revenue. We also have some one-time businesses where we will be doing an automation solution sell-through, but that's a very small part of our revenue. So I think when you think of it from a business contribution, almost I would say 80 to 85 to maybe 90%, depending year to year, of our revenues annuity / recurring, because we have a logic to what we call annuity, what we call recurring, and the one-time revenue can be a little bit. We think it'll be 10% of revenue ongoing basis, but could be higher if we have very big wins there. So I hope that helps explain the way. I don't think we do segmental P&L at the EBITDA level, but Pankaj can give you a little more detail on that.
So if you will refer to the RHP page number 274, note 34, you will find the segmental financial, and you can able to calculate the EBITDA there. Both the major business, MS and cash, have enjoying the similar level of the EBITDA, and both the EBITDA is growing over last 3-4 years.
Thank you, sir. Next question. Why did you enter the remote monitoring space? What are the prospects for this segment?
Sure. Remote monitoring sector we have examined for some years, and I think we were in the prior years, basis the competitive intensity or what was going on, I thought we wanted to wait to see what would be our playbook. Again, our playbook, I'll repeat it I don't want to bore you. it's only when we are able to see a clear path to becoming a number one, having a differentiated moat and offering so that it's more compelling for a customer. It could be quality, it could be network, could be cost, could be anything, which gives us a significant advantage over the competitive landscape is only when we'll enter a sector. I think that all came together in the year of COVID, because I'm sure many companies were not able to weather COVID as well as, let's say, companies like us did. Number one. Number two, many large clients were encouraging us to examine this sector for some time because they were struggling to find partners who could help them deploy this at a rapid and faster pace. So I think that all came together last year. We have made a small acquisition that's to acquire the base technology, and on which we have been then working to improve it, to make it more proprietary and robust, and using which we have bid for large contracts, won them, and now are executing them. The prospects for just as I said, for the BFSI sector itself is a currently, or last year it was estimated to be 800 crore market, which is going to potentially a 3,000 crore market. We have an order book which is 15,000 sites. We have an order book of almost 300 and what is the number? I think it was if I look at the slide, it was 380 crores. We have a 380 crore order book in the remote monitoring business, which is a business which has zero revenue in FY21. So I think it's a very exciting sector. We have aspirations to obviously build this beyond banking, because this can be a pure tech play, which doesn't need any specific vertical focus. But the vertical in BFSI is very, very exciting for us, and we think we have got a very strong potential to do much better there from where we are starting.
Thank you, sir. Next question. How has the growth in margin been over the last 3 years? And is this pace sustainable?
Pankaj?
So 3 years, our EBITDA margin is improved by 19%, and our CAGR PAT increased by 32%. During this first 5 months, if we will extrapolate the PAT for 12 months, it will give us around 20% growth over 21.
Thank you, sir. Next question is from Gitanjali Kedia of SC Tulsian Investment Advisors. Why has the outstanding trade receivables risen to 4.4 months as of August 21, from 3.2 months as of March 21, and further from 2.9 in March 20?
So there is two parts of this. One is we considered, actually we are in a lot of project-driven business, wherein the DSO levels are slightly higher. Our DSO levels are ranging from 115 days to 135 days. But our working capital is ranging from 45 to 75 days. We try to measure ourselves on the working capital days rather than the DSO, because a lot of customers are the public sector banks, where generally the DSO days are higher, because considering the project we handle. This is a large complex project where it takes time. Second part is basically the calculation. I think now, because of the revised guideline, the unbilled part is also added in the AR. So if he or she compare the entire RHP, it is more or less same. Last year and this year, more or less at the same level. So in DRHP, when the DRHP was given, the unbilled portion was given separately. So there could be some gap there. But now, based on the revised guidelines, the entire AR and the unbilled is produced together. So if you calculate, it will come to the similar numbers.
Thank you, sir. The next question. How does growth in e-commerce impact the prospects for retail cash management in India?
Sure. I think overall, the growth of retail, organized retail, is exciting. It gives us a very strong opportunity for our retail sector to grow. E-commerce is growing well, and so has our business been. As I said, a large part of e-commerce is cash and delivery, even today in the length and breadth of the country. And e-commerce companies are always looking for more efficient ways to handle this. We have seen fairly high growth from the e-commerce sector in our retail part of our value chain. And I think that's very good for our growth going forward.
Thank you, sir. Next question. It's from Mehul Dani of Banking Frontiers. How do you view the changing regulatory landscape for business growth perspective, especially from the bank's perspective?
Yeah, so I think, any regulatory impact in any industry is usually to the benefit of a consumer, right? We should remember that whether you go to telecom or you go to banking or you go to anything, I think the regulators are always focused on making sure that a consumer benefits and has choice or gets better quality. I think that's the purpose of regulation. And therefore, when I think of it, I don't think we should think of it, what are the benefit to us or what are the benefit of the bank? The idea is saying that who is getting to get the benefit, that's the consumer. So we say, we look at any regulation saying we as a market leader need to comply. We are always a highly compliant company and we will make whatever investments required to be compliant with the latest regulations. So I think from that perspective, running a very good quality network, running a very good high quality cash ecosystem and currency ecosystem is in the interest of the country. And whether it's the banks or companies in our sector, we will do whatever it takes to comply with RBI's guidelines.
Sure, thank you, sir. Next question. How does the company plan to utilize excess cash in the future? And what will be your dividend policy?
So I think I will talk about from a cash utilization perspective, and Pankaj can opine on the dividend side, but on the whatever cash we generate, right? I think we have been a very prudent management team, and that's why you look at the fact that we have end of FY21, we had more than 300 crores of cash in the books. We always look at having a war chest of cash for growth. But growth can be both organic, it can be project driven, it can be M&A. So I think from all of that will be opportunities we will look at. We will look at consolidation in key sectors. We will look at capital to enter new sectors. And we will also look at capital for if we get very high quality bank customer contract wins, if they need capital, and also for compliance, right? To keep complying and keep upgrading and expanding a network, we look for capital for growth. Going for those listings should also give us a currency from an acquisition perspective in new sectors, hopefully in the future. We have a good order book right now, and that order book also will need some capital to go and deploy behind that. From a dividend perspective, Pankaj could maybe give you could give you some trends on how the dividend policy has been, and the future obviously is determined by the board.
So in past, we have given all the, if you will see the page number 212 of the RHP, you will find the dividend policy and the past trends of dividend. You will find that we have given a dividend of 15% to 25%. All the years we have published the result. It is around, even in last 5 months, we have given a dividend of 15.3%, which is around 22.6%, 22.6 crore rupees. Future dividend is to be determined by the shareholders and the board.
Thank you, sir. The next question is from Ravi Ranjan Prasad from Deccan Chronicle. How much is the bullion and jewelry business as a component of your total business?
The bullion and the entire bullion sector is something we've been incubating only in FY, I think 20-ish odd, and I think this is still very small because FY 21 we were not able to ramp up. I think this is an incubating period. It is still it's a very small part of our overall cash management business.
Thank you, sir. Next question from Srivats Krishnaswamy from Hindu Business Line. Do you see the rapid increase in digital payments impeding the growth of ATM networks in the country? And does that not impinge on your business model and profitability of services in the years to come?
It's a fair question to think about, but I think when you look at, I tell people and point them to the fact that digital payments in India took off long ago, right? From wallets and then to UPI, right? These are not overnight things. These are things which have happened for the last 7-8 years. And you have to look at the trajectory of the market. You have to look at the trajectory of a company and look and say, in the past 5, 6, 7 years, pre-demonetization, post-demonetization, pre-COVID, post-COVID, we as a company have continued to grow our revenue and margins and profits significantly at a fairly rapid pace. Which sort of points you to the fact that it's not about cash and digital, it's about serving the bank and handling their needs of their value chain. There is, again, I go back to saying I come from technology sector. I keep pointing people to the references. There is a very large opportunity for outsourcing of various services from banks. Banks continue to be a big part of the Indian economy, and financial inclusion. As they ramp up those services, they will look for partners to do more and more while they focus on their core business. And it'll be difficult to even convince you today of what new services could come in the next 5 to 10 years, but we learn for it, we aspire for it, looking at other countries and what they've done. Those ecosystems don't exist today, and therefore you'll always see types of service offerings change. You'll see types of solutions change. We were only a cash management company till 2014-15. Then we did managed services. Then we did software. Now we're doing remote monitoring. So there will be new solutions that will come. But the whole thing I want to take you back to is that we serve the Indian banks in their serving of the consumer. I think that need and that growth is what will propel the opportunity for companies like us to evolve and adapt to however the market changes.
Thank you, sir. The next question. Your managed services business seems to have grown very fast over the last few years. Is this trend expected to continue?
So we are at a spot where when you look at the large banks in India, large banks, right? Public, private, whichever ones you think, they, for the last 3 to 4 years, had some challenges to deal with. For some, it could be the NPA situation. For some, it could be COVID. And they were in a, and there also we saw a lot of PSP mergers happening. Coming out of the cycle, we were seeing the banking sector poised for good, rapid growth. And as that happens, there is a long pending refresh cycle of contracts where banks need to upgrade and update their network and infrastructure, including ATMs. So there are massive, large public sector bank RFPs, which are in the public domain. You can refer to any bank website and check, which will lead to significant contract orders going to people who are able to win them. Going back to what in FY21 we did, we had a managed services business of 365 crores. We have an order book in managed services of roughly 1,550 crores. So you take the 1,500 crores, you divided by 6 to 7 years, that's the average revenue throughput per year, which should get added on to our managed services business base, assuming we don't have any other wins. So you can imagine how quickly we can double that business. So obviously you're coming from a smaller size, that business will grow, should grow rapidly, because that's why we entered the sector, because we see massive growth opportunity there for us. And the larger businesses will grow at a smaller pace because these are more evolved value chains, and therefore they are, and we are a large part of the value chains.
Thank you, sir. We are coming to the last couple of questions now.
Sure.
The next question is from Arman Nahar of Z Business again. Your top 3 customers account for around 45% of the revenue. Could you tell us when these customers were onboarded by you, or since when they have been with you? And could you also please name some of your key customers with whom you worked for a long time?
Sure. So I think what you have to understand is that when you talk about the top 3 customers, this includes SBI, right? SBI is the country's largest bank. 25% of India's economy, I am told, runs on SBI. So therefore, and for us, SBI will be less than 18% of our revenue or something, or 20% revenue. But that is multiple different businesses, multiple different contracts. It's not one contract with SBI. We will at any point of time have multiple contracts running SBI for different services. So even though the name is the same, but if you look at it, the contracts are very different. Similarly, the other customer, which is a large customer for us, Hitachi. Again, for them, we work for different lines of businesses for different customers of theirs. So these customers, I mean, we've been working with SBI and our top 3 customers forever. We've been working for all the banks for a long period of time. We work with every bank in India. So I think when you think of the concentration of our top customers, it is actually sub-segmented into various different contracts signed in different years, which run from a different length perspective.
Thank you, sir. Next question. You have mentioned inorganic growth as one of your pillars. Could you tell us about the acquisitions you've done in the past few years?
Sure. I think we've, over the last 7 to 8 years, we've done about 7 M&A transactions. Most of these have been small tuck-in, but our M&A strategy is what? Either we are looking for consolidation to get scale benefit, and therefore these are transformational acquisitions. This is what we did with Securitrans in 2011. We then also, when we enter a new sector, we do it organically. Sometimes we will go and buy a smaller company so that we're able to understand the technology, the service offering, and then we can scale it. I think we did this when we entered the managed services space, and this is what we did when we entered the remote monitoring space. We were both new tech-oriented areas. And then within cash management, as some smaller companies weren't able to scale and they wanted to sell, I think we did some small tuck-in and bolt-on acquisitions, including one which we did in the middle of COVID last year in 2020 for Logicash. And in the prior year, it was a couple of years before, I can remember 2018, we did Checkmate. So either in our core business of cash management or entering into new businesses like managed services or remote monitoring, we have had an experience of doing both small tuck-in, bolt-on, and large transformational acquisitions.
Thank you, sir. And the final question for today. Could you please tell us why you have priced the IPO at such an attractive level optically?
I think the pricing of the IPO is something our friends, my BRLM friends, will be better placed to answer. They are in charge of it, and I don't know who Access or somebody else is willing to help answer that question.
Ironic how we typically get a question as to why is the IPO always priced so expensive. This time we're getting the reverse way around. I think from the perspective of whether it's expensive or not is not a point to debate. What's important is that the journey that Rajiv and his team have gone through in terms of achieving the kind of scale, the kind of depth, the kind of client concentration levels, and most importantly, the key relationships that they have established over these years has led to investors appreciating their journey and the value proposition that it plays on the whole India story. So that's the reason why the IPO is priced at the level. Expensive or not, I'll leave it for you guys to figure out in terms of how you'll see it once it lists. Thank you.
I think just to add to what Vishal said, the multiple you get it is for growth. The company in the last 3 years has grown, the PAT has grown 32% CAGR. It is one of the largest kind of growth we see in the listed market space. So when you're growing at that kind of rate and the way they have performed, this was during the COVID period. So when investors took into account how to price this issue, they took into account the fact that the company continued to grow the profitability even when they had a COVID-related disruption for more than 1.5 years, right? So that's all these are the things which are get considered when investors price an issue. And that's why we price the issue at the current price. I think the growth, they will continue to grow at the current rate is something investors have assumed because there is a big disruption in the market, which is not likely to again come up in the future. So all these things are taken into account when you actually come up with a valuation number. And that's why we have come up with a valuation number. Thank you.
Thank you, sir. And that brings us to the end of the Q&A session. Now I'll invite Mr. Hiren Rai Pancholia from JM Financial for the vote of thanks.
Thank you. On behalf of the book running lead managers, I'd like to thank Rajiv and Pankaj from CMS for their valuable insights into the company and its IPO. Just to recap, CMS is a distinct opportunity. It is a leading player in a consolidating market with strong fundamentals, pan-India footprint with deep penetration in growing markets, integrated business platform offering a broad range of services and products, systems and processes to manage and scale an operationally complex business, track record of strong productivity and operational excellence, and experience in a highly qualified management team that have successfully grown the business. Just to recap, the details of the issue are the issue opens on Tuesday, December 21st, closes on Thursday, 23rd, with the anchor book opening and closing on Monday, December 20th. This is an issue of up to 34.4% of the capital of the company with an amount up to 1,100 crores. The price band for the issue is 205 to 216 per share, and listing is expected by Friday, 31st December. We see a lot of investor interest for this deal, and we look forward to your support to make it a grand success. Thank you.
Thank you, sir. And thank you everyone for joining the virtual press meet of CMS Infosystems Limited for the forthcoming IPO. Please feel free to reach out to us for any further queries or email us at ipo@adfactorspr.com. We'll do our best to reply to your queries at the earliest. Members of the press, our team will reach out to you shortly with the press release. Take care and stay safe. Thank you.
Thank you.